Hi friends, welcome to the accountancy class. Today we are going to learn about the important journal entries passed when shares are forfeited. Forfeiture of shares means cancellation of shares. The shareholder who applies for the shares of the company makes an offer on the one hand, and on the other hand, company by accepting shares or allotting shares accords acceptance. In this way, offer and acceptance with the lawful consideration make a valid contract between the shareholder and the company. The contract makes it binding upon the shareholders, that is allottees, to pay the installment of allotment and calls whenever due. When a shareholder fails to pay the amount due on allotment or calls within the stipulated time, his shares may be forfeited by the company. That is, his name is cancelled from the list of members and the amount already received from him is not returned to him. The difference between forfeiture and surrender of shares means forfeiture of shares is the compulsory termination of the membership of the company as penalty for non-payment of calls in arrears on shares, whereas surrender of shares is the voluntary return of shares to the company for cancellation. Now we are going to learn about the effect of non-payment of installments. If the shareholder fails to pay the allotment or call money or both, the company sends reminders to the shareholder to make the payment of calls in arrears. In case the reminders do not produce the desired result, the company, if permitted by its articles of association, serves a clear 14 days notice to the shareholder concerned to pay the amount due with interest, if any, by a certain specified date, failing which shares are forfeited. The effect on amount already paid is forfeiture means the seizure of shares. As such, whatever amount has already been received on shares being forfeited is seized. While passing journal entry regarding forfeiture, share capital account is debited with the called up amount on shares. The logic behind the debiting the share capital account is to cancel the share capital on forfeited shares. Forfeited shares account is credited with the amount received on forfeited shares. Forfeited shares account is credited with the amount received on forfeited shares because whatever the amount has been received will be seized. As such, it is a gain to the company and thus credited, being a nominal account where the rule is debit all losses and credit all gains. Calls in arrears account or specific call account is credited to close these accounts. The journal entry passed for recording forfeiture of share is share capital account debtor to forfeited shares account to unpaid calls or calls in arrears account. The amount transferred to share capital account equal to number of shares forfeited into called up value. The amount transferred to forfeited shares account equal to number of shares forfeited into actual amount paid by the shareholder. The amount transferred to unpaid calls account equal to number of shares forfeited into non-payment amount of allotment money or call money. In all cases, the amount transferred to share capital account equal to number of shares is forfeited into called up value. That called up value may be nominal value, or face value, or called up value. After writing journal entry, then write the narration being forfeiture of shares for the non-payment of allotment money or call money. Now I am going to give one example. A company forfeited 100 shares of 10 each for the non-payment of allotment of money of rupees 300 and final call of 4 rupees. That means total face value of share equal to 10 rupees, allotment money 3 and final call money 4. balance 3 rupees on application. The entry is share capital account at 1000 rupees, that is 100 shares into called up value of 10 rupees. To forfeit shares account 100 rupees into 3 application money. Then to share allotment 100 into 3, that is to allotment account 100 into 3 300 rupees. To final call 4 into 100, that is 400 rupees. B, forfeiture of 100 shares for the non-payment of allotment and call money.